Greetings and welcome to the Alliance BioEnergy Plus Planet MicroCap webcast. It is now my pleasure to introduce your host, CEO Ben Slager. Thank you. Mr. Slager, you may begin.
Thank you. Thank you very much for giving the opening. Ladies and gentlemen, welcome to our presentation. We would like to present our company, who we are, what we do, and why we think it is very attractive for people to be part of that. Very quick introduction of myself. My name is Ben Slager. I'm the CEO. With me is Anthony Santelli, CFO. So let me jump right into the presentation and explain what Alliance does. Alliance BioEnergy is a company who developed a revolutionary technology to convert cellulosic waste material into useful products, sugar and lignin. The sugar is processed by fermentation into cellulosic ethanol and is further processed potentially in biodiesel and biojet fuel. The other leg is the lignin, which comes available in that process as a byproduct, basically. And what makes that lignin so good, due to the nature of our process, which is very chemically friendly, so to say, we only use a very benign catalyst. Our lignin is an chemically unmodified lignin, which lends it to produce bioplastics very favorable because the lignin is ready to go. We don't need to clean it. We don't need to modify it like lignin from all other competitive processes, like, for example, the paper industry. That lignin is simply not suitable to make bioplastics. So we have two main product lines, that is the bioplastics and that is the biofuels. The very interesting part of our technology is that it enables us to produce those products basically at a very low cost level. And normally I would say lower than fossil fuels, but with the present fossil fuels price, I cannot sustain that. Our cost level is equivalent to a $20 per barrel oil price. Then we start to make an intrinsic margin and profits on the fuel side. The plastic side is basically originating from the lignin, which is a byproduct which is very profitable by itself, adding to that margin. We also have a very beneficial comparison to the corn ethanol, because our feedstock is way cheaper than the corn which is used for the corn ethanol. And the market for ethanol is basically limited at 10% of the volume of the gasoline used in the U.S. Our cellulosic ethanol is not limited by that cap. It is mandated to have a minimum volume in 2020 of almost 600 million gallons, which goes up seriously in the years to come. The plastic side, we all know that the world is full of plastic. It is wherever you look, wherever you see plastic used, plastic in the garbage, plastic in the nature. And that is a very hot topic where we have a solution to be able to produce bioplastics, which are bio-originated to start with, and they are also biodegradable, and we can tune the amount of degradation, how quick that goes. So that is basically what we do, and the technology is developed to a stage where we just pre-production. We are working on our fourth prototype, which is half the commercial size. We expect to have that in a couple of months ready to finalize it to the next step, commercial size. The market, as we discussed, is basically for us almost infinite, because the amount of biofuels which are going to be needed in the future is such a big amount that we as a company do not see that we can fulfill that market in the next couple of years. And basically that is the same for the bioplastics. That market is almost infinite. If we just look at the amount of straws only used in the U.S., that's about 400 million straws per day in the U.S. only. If we would only take a small part of that market, we would be filled up completely in our capacity. So that is not an issue for us, that the market size is not there. We see that the feedstock is also basically a large quantity available. We can use basically all agricultural waste products. We can use the cellulosic fraction of municipal solid waste. There are many facilities in this country where municipal solid waste is separated in several fractions like glass, plastic, steel, and so on. Cellulosic fraction is one of them. We have tested that extensively. Very good feedstock to produce the biofuels and the bioplastics. That's in a short overview what we do as a company. What I would like to emphasize, and I don't know how many listeners know our company or not, and have looked into the history, and why is it a good time now to look at our company, to potentially invest in our company, whether it's in a private placement, whether it's in the market in general. And that is basically originating from the fact that the original technology was interesting. The chemistry was great. The reactor was not efficient enough. We invented and developed a new type of reactor, which we call the CTS 2.0 reactor, which is 1,500 times more effective than the reactor we had before. Unfortunately, the previous management wasn't able to manage the company in a good way, not at arm's length. We had to separate from the management. We had to clean the company up financially, which we did. We have finalized that process the end of last year. Basically, we have now a new and a clean platform, clean balance sheet, no debt. We have a new technology. We're working on upscaling our prototype to commercial size. And since we are relatively recently out of that restructuring, the valuation is still very attractive at this moment. Maybe, Anthony, you can tell a little bit more about that, about the valuation and share structure, and I'll get back to you with some more information after that.
Yeah, our market cap at 6 cents is currently about 15 million. We have, if we get one plant up and running, 100 million gallons of ethanol, we would be able to produce, north of $100 million in profits. What we get, which is distinguished from the corn ethanol, is what's called a D3 RIN from the government. The government offers a renewable fuel credit. There are many different kinds. There's a D3, a D4, D5, and D6. But the prices for the Cellulosic RIN, which is a D3 RIN, is currently $1.40 a gallon, and that's on top of the ethanol price. For 2020, the mandate is 590 million gallons of cellulosic biofuel that need to be produced. The market doesn't produce that much, so let me take a step back. What happens is 10% of the fuel supply in the United States, when you fill up at the pump, is ethanol. And the blenders who blend the ethanol into the fuel have to blend a certain percentage of that ethanol. It needs to be cellulosic. And if they can't get it, then they actually have to pay the Environmental Protection Agency a fine for not being able to find it. So that's since nobody can produce it right now, that's why it's $1.40 a gallon as compared to, if you're looking at the slide, the prices of the other renewable fuel credits. For corn, it's just 16 cents. And so that offers us a major profit advantage right there. In addition to that, of course, our feedstock is significantly less expensive. We don't have to buy corn. We either get someone else's waste or maybe grow grasses. And grass is a lot cheaper than corn. So we have a significant cost advantage there. And, our value proposition is, we're probably one of the few companies that realistically has a chance of, giving the investor a 100x return. I mean, we're 15 million market cap right now. If we go to $1.5 billion, which, one or two plants want to be able to justify that kind of a market cap, then, we're already there.
Yeah, maybe to add to that, Anthony, as I said before, which I want to reiterate, the reason that we are at a modest valuation now is because we just came out of the restructuring, both technology-wise and financial, and that's why we are still at a modest valuation. We will see that go up as soon as we start to show the final results from the prototype coming now. We have very, very strong results in the previous prototype, which was quite a bit better than expected. We were able to learn a lot from that and have further developed the next step prototype in advancement of technology and in size and capacity. What I also like to emphasize is the present situation, which seems like a dire situation for a lot of energy companies and also for us. However, we see it as an ultimate opportunity because this will create a shakeout in the corn ethanol industry, which was not profitable already due to the fact that we have an artificial cap on the demand side, but there is no cap on the supply side. So you get a squeeze there where there's a lot of factories not able to make a margin. Now, in this situation, a lot of factories will close down between now and 6 months, 12 months, which pose an opportunity for us to pick up such a factory for pennies on the dollars, convert it to cellulosic ethanol, and make it instantly very profitable. So that raises opportunities for us at the moment. We also see that the present oil price will for sure not maintain because there is no oil country or oil company able to make profit on these prices. Maybe Saudi Arabia, they have a cost price of $8-9 to get it out of the ground, but that's excluding the profit. So for sure it will go up, and if it will stay this low, there will be a shakeout in the industry and the prices will go back up. What we also see as an interesting phenomena is that people see that by lower air traffic and traffic in general, it seems that the pollution in the air disappears a little bit, that it cleans up. That makes people realize that we really have to do something about the environment. So that movement towards the future will only increase. And legislation will only increase to force the industry to come up with renewable solutions, renewable fuels, renewable plastics, and abandon the fossil industry more and more. It's almost like in the old days, everybody smoked, and now nobody smokes anymore. So that same trajectory we will see with the fossil fuels, and there will be all kinds of development. Where I do want to be realistic and emphasize that we will not be the only solution because simply the market is just too big for us to address as a whole. So that is what I want to say as a side note. But apart from that, our challenge is not do we have market. No, our challenge is which part of the market can we serve, and how quickly can we do it. And that is a function of team, finance, and so on. The technology is in place, the market is in place. We have a clean shell now, very clean company, no debts. So every single dollar which is invested in the company goes directly to the technology. So that is a very, very favorable situation we're in.
Shall we address a couple of the questions here?
Sure. Please do. Read them and then, go ahead.
Okay.
I will answer them.
Okay, let's see. Here's one question. Congratulations on getting through your bankruptcy a few months back. How bad were the old shareholders hurt as you emerged from the process? I guess I can take that one.
Sure.
The shareholders were not hurt at all. We saved the shareholders. The debt did not convert into stock and cause dilution. We basically, fought the debt and lawsuits and et cetera, pushed off some to be out of future profits, but there's no short-term or technically even long-term debt as that's properly defined. So the shareholders kept the company.
Yeah. So I would like to add to that, Anthony. As maybe some people know, it took a while to get through the Chapter 11, and that's because Anthony and myself did it in basically a very thorough way. We could have gone very quick and hefty through the thing, but that would have meant that all the shareholders would have lost their equity. We chose not to do it. We chose to fight the battles one by one, and that's why it took a little bit longer, but everybody kept his shares. Next question.
Yeah. Let's see. Please elaborate on your opportunities for ethanol production.
Okay. We intend to produce ethanol with our process, and that could be in several ways. We could build the factory ourselves, which is very well possible. However, looking at the situation of the existing ethanol market, we will probably supply cellulosic sugar to existing factories, making joint ventures with them to convert them, or outright buy facilities to convert them ourselves. That's basically the three possibilities which we see as most likely. And I would also like to emphasize that wherever we make ethanol, we will get lignin basically for free, and we will produce plastic in a similar volume. And that is very, very interesting as well. We should not forget that at all, and not only talk about the fossil fuels, but also very strongly about the degradable plastics.
Here's another question. Does your end product have a lower carbon footprint?
Yes, absolutely. And let me explain that. Our carbon footprint, so if our plastics digest and or our fuels burn, they exhaust CO2 as well. But that CO2 is reabsorbed by the plants growing, which we use to produce the ethanol. So basically what we do is we recycle CO2. Unlike fossil fuels, if you pump it out of the ground and burn it, you add CO2 to the atmosphere. What we do is we take it out the atmosphere while the plant's growing. That same CO2 is going to be returned to the atmosphere when our product decays in the case of plastic, or burns in the case of fossil fuel. So, of course, in the whole process, we'll probably lose about 10-15% of the CO2 due to the fact that to run the factories, that costs some energy as well. But we're almost carbon neutral. So we have an advantage towards fossil fuels for about 80 to 90% better CO2.
Here's another question. What cellulosic products can you use to produce the sugar ethanol?
Well, I assume what meant is what feedstocks we can use.
Exactly.
Basically, We can use any cellulosic material from king grass grown on lands which are very poor and not usable for agriculture, cellulosic fraction waste of municipal solid waste, agricultural waste like in the big wheat fields, the straws, any hay, any nutshells, all that type of agricultural waste and forestry waste. That's all very, very good feedstock, and we have tested tens of feedstocks. So virtually every cellulosic material, provided it is available in a constant volume and a reasonable constant quality, we can convert very efficiently.
Let me address this question.
Mm-hmm.
Where is it? How much money has been invested in the company to date? How many shares are outstanding?
Yep.
The money that's been invested to date, we have accumulated tax losses of probably about $37 million. How many shares are outstanding? It's about 250 million, fully diluted, a little over 300. How much does the management own? Probably about, 50 million, 50 or 60 million, thereabouts.
Yep.
I don't know if we have any more time.
Well, maybe a couple more minutes. What I would like to add to it is one interesting value item is, of course, the deductible loss or the accumulated loss which we have in the company, which is a sad thing over the years. But the good thing is we start to make profit. We don't pay tax for a while.
Okay, I guess.
Is there any more questions, Anthony?
Well, there's let's see. Have you had any interest from previous potential customers that now you are back on track?
I'm not sure what is meant by previous customers. Is that meant investors or customers?
Yeah, I don't know. I'll just address it briefly. I mean, we do have a new board member who's has got extensive contacts in the aviation world, and once we're in production, if we need an offtake agreement for jet fuel, biojet fuel, we can pretty easily get one.
Yeah. Maybe add to that, we are already in discussion with several smaller general aviation jet companies who have expressed a very high interest to purchase our cellulosic jet fuel. Are we still on?
Yeah, I guess we are.
I think it is about time. I think our time is up, gentlemen and ladies. We are at 25 minutes. We're supposed to be at 20.
Yeah, if anyone else has more questions, please, you can just email them to us. This is because I noticed there are a few more questions here that we haven't had time to address.
Yeah, why don't we try to go on until they cut us off? Just pose a couple more questions.
Okay.
You could take another question or two. This is the audio operator. You could take another question or two, and then we will have to have everyone email you the questions, like you said.
All right.
Okay.
Last two, Anthony.
How soon do you see fuel and plastic plants production commencing?
2 years from now. If not sooner, if we take over a plant, it could be 1 year from now.
Can we acquire plastic bottles as a revenue stream? I don't know what that means. No, we don't use.
We don't use waste plastic. We produce our own plastic from bio-originated material, and they are biodegradable. The one thing to be also candid with the audience, plastic bottles is one of the most complicated plastic form because usually they consist of 5 to 8 layers to keep them from leaking ingredients, unless it's a straightforward water bottle. But other types of bottles might be more complicated. We will start with straws, utensils, and that types of plastics, and develop that onwards to more applications. That is basically what the plan is for now. Ladies and gentlemen, I sincerely thank you for your interest. Unfortunately, we don't have more time. We would love to talk to you much more. If you have questions left or interest, or if you want to know things about us, please do not hesitate to either call us or email us, either Anthony or myself, and we'll be happy to address that.
Thank you much. Thank you very much.
Wish you all the best. Please, everybody, stay safe, and we'll hope to be in touch with you all. Bye-bye.
Bye.
Thank you so much. This does conclude today's webcast. You may disconnect your lines at this time. Thank you for your participation, and have a great evening.